PayPal. Just the name probably brings up a lot of questions for you, right? Is it a dinosaur in the fast-paced world of fintech? Or is it a sleeping giant ready to erupt? For years, it felt like PayPal was stuck in neutral. The stock, well, let's just say it's tested the patience of even the most seasoned investors. But what if I told you that beneath the surface, a massive transformation is underway? A strategic pivot that could redefine its future and potentially your portfolio. Today, we're not just scratching the surface. We're diving deep into PayPal Holdings, PYPL, peeling back every layer of its financials, dissecting its competitive moat, and unearthing the bold moves its new leadership is making to reclaim its throne. We'll break down the fundamental story first, the surprising profitability surge, the massive share buybacks, and how they're embracing the future with things like stablecoins. We'll also look at its valuation and what a potential stock price drop could mean for it. Then we'll hit the technical charts hard, giving you my critical short-term levels and my bold 5-year price target. By the end of this video, you'll have a clear understanding of my full strategy for PYPL. So, if you've ever wondered about PayPal's true potential, or if you're holding shares and need clarity, stick around. You won't want to miss what we uncover. Let's get started. All right, let's kick things off with the sheer scale of PayPal. In fiscal year 2024, this company processed an astounding $1.68 trillion in total payment volume. That's not small change, folks. And they did this across a network of 434 million active accounts worldwide. Think about that for a second. Almost 500 million people and millions of businesses rely on PayPal. But despite these massive numbers, the stock has struggled. Why? Because the market was looking for something different. Enter Alex Chriss, the new CEO who took the helm in late 2023. His mandate, a complete strategic pivot. The old PayPal chased user growth at any cost. The new PayPal is all about profitable growth and efficiency. This isn't just talk, it's the core of their turnaround. And we're already seeing the results in their financials. This is where it gets really interesting. Look at this chart. While PayPal's revenue growth has become modest, a stark contrast to the high double-digit growth we saw just a few years ago, we're now talking about low single-digit percentage increases, like Q1 2025 revenue up just 1 to 2%. But their earnings per share, or EPS, has absolutely soared. This is a key measure of the company's core profitability per share. We saw a 21% jump in FY 2024 and another 23% in Q1 2025. This divergence is crucial. It tells us that Chris's focus on cost controls, streamlining operations, and prioritizing higher margin activities is paying off big time. Beyond profitability, PayPal is a free cash flow machine. They generated a whopping $6.8 billion in free cash flow in FY 2024. And what are they doing with that cash? They've authorized a massive $15 billion share repurchase program. Think about that. That's over 20% of their current market capitalization. This is a powerful signal for management that they believe the company is significantly undervalued and they're putting their money where their mouth is to boost shareholder value. Now, let's talk about valuation. Currently, PayPal trades at a forward price-to-earnings ratio of around 14.3 times based on 2025 estimates. This is already attractive compared to its historical averages. But here's the kicker. If the stock were to drop 40% from current levels, bringing it into my target buy zone, that forward PE would fall to around 8.6 times earnings. That's incredibly cheap for a company with PayPal's market position and turnaround potential. Now, let's talk about the Castle Moat. What protects PayPal from its competitors? First, it's their brand recognition and trust. Surveys show consumers are 54% more likely to make an online purchase if the merchant accepts PayPal. That's a huge psychological advantage built over decades. People trust PayPal with their money. Second, it's their massive network effects. With 434 million consumers and 36 million merchants, every new user makes the network more valuable for everyone else. For merchants, PayPal offers crucial services like chargeback protection, which can reduce fraud losses by up to 90%. That makes them indispensable. And despite the fierce competition, PayPal still commands a dominant 45.52% market share in online payment processing. This isn't a company struggling for relevance, it's a market leader. But what about the future? Is PayPal ready for tokenization and stablecoins? Absolutely. Tokenization isn't a threat, it's a core part of their strategy. By replacing sensitive card data with secured tokens, they enhance security, reduce fraud, and improve transaction authorization rates. This translates directly to better conversion for their millions of merchants. And then there's PayPal USD, or PUSD. This proprietary stablecoin is a strategic leap into the digital asset world. It's designed to enable faster, low-cost cross-border payments and bridge traditional finance with the crypto ecosystem. With PayPal's vast network, PUSD has the potential to become a significant player, opening up entirely new revenue streams. No investment is without risk, and PayPal is no exception. On the risk side, we have intense competition from tech giants like Apple Pay and Google Pay, and agile fintechs like Stripe. Regulatory scrutiny is also increasing, leading to higher compliance costs and potential fines, like the recent $2 million NYDFS fine for cybersecurity issues. And let's not forget slowing user growth in saturated developed markets, making new user acquisition a challenge. However, the opportunities are significant. The global e-commerce boom continues to be a powerful tailwind. The potential for PUSD and crypto to capture a large share of the cross-border payments market is immense. There's still untapped potential in Venmo monetization, and PayPal is increasingly leveraging AI to improve efficiency, security, and personalize user experiences. All right, now let's shift gears to the technical analysis. My personal outlook for PayPal in the short to midterm is bearish. The charts indicate that we could see a further decline from current levels. My short price target is between $65 and $75. However, this bearish view is contingent on PayPal staying below the $82 mark. If it breaks decisively above 82, that would signal a potential new bull run for the stock, and at that point, I would no longer be shorting it in the short term. These targets are critical for a correct analysis, helping to define the conditions for both my bearish short-term outlook and my long-term bullish strategy. Because of this short to mid-term bearish view, my strategy is to actually look for a buy price target between $39 and $53. This is where I believe the stock could hit its bottom, providing an excellent entry point to profit from the next significant bullish market cycle that could take hold for PayPal. Looking out at the long term, specifically 5 years from now, my price target for PayPal is a bold $490 to $550. This ambitious target is contingent on PayPal successfully executing its strategic pivot, fully monetizing platforms like Venmo, achieving widespread adoption of PUSD, and solidifying its position as a dominant, indispensable force in the evolving digital payments landscape. If these fundamental improvements materialize from a lower base, the potential upside from my target buy zone could be truly transformative. So there you have it, a comprehensive look at PayPal, PYPL. It's a company in the midst of a significant transformation with strong underlying fundamentals and strategic bets on the future of digital payments. My short-term technical outlook is bearish, but for those patient long-term investors looking for a deep value entry point, the long-term fundamental story, if executed well, paints a very bullish picture. What do you think? Is PayPal heading lower before it soars higher? Let me know in the comments below. If you found this analysis helpful, please hit that like button, subscribe to the channel for more in-depth stock breakdowns, and share this video with anyone who's looking at PayPal. Thanks for watching, and I'll see you in the next one.